Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very beautiful weekend. And in today's markets, guys, well, it was pretty much a day of not much. Not much price action and not much movements on the markets as a whole, which is a very stark contrast in relation to the last roughly 2 weeks of trading, where we've seen insane levels of volatilities and huge price swings up and down. Now, that is for a reason here, guys. Very low volume on this Monday session. Why do we have such a muted day? Well, undoubtedly, it is because traders and investors are largely waiting on the sidelines in anticipation of all the macro data news releases that we have this week, and most of all of them are pertaining to the consumer. We know the consumer has been front and center, really arguably for the past month and a half. We've gotten reports from different companies on their earnings calls signaling that consumer discretionary spending is getting weaker and weaker by the month. Now, that coupled with a few weaker than expected jobs reports as of recently really puts the recession narrative front and center into everybody's minds. So these data points this week are going to be absolutely crucial to determining whether or not we're getting closer to a recession or whether or not maybe some of the fears are overblown. Take a look tomorrow. We have producer price inflation numbers coming out first thing in the morning. Then we have Fed member Bostic speaking. Thereafter on Wednesday, big day as well, CPI, another inflation report from the consumer for the month of July. Then on Thursday, the data continues. We get more initial jobless claims. Going to keep a very close eye on this one. We have a different Fed member speaking as well that day, Fed Harker, and we also have some retail sales directly linked with the strength of the consumer. And then on Friday, to wrap it all up, we have one last Fed member Goolsbee speaking, and we also have Michigan Consumer Sentiment Index, another gauge into the consumer. So a few sales data points right here, some jobs data points right here. Everything is going to point to whether or not the consumer is still relatively healthy or whether or not the struggle is potentially starting to accelerate towards the downside. So that is largely what traders and investors are waiting out for. And I would not be surprised if the volatility does come back at the midpoint of this week. Even someone like myself, guys, I was very, very relaxed in my trading today. Only put on one single position because I did not find the deals that I was looking for. And in light of all the data that's coming out this week, we may just have better opportunities if the market puts in one of those big red days that we've been kind of getting used to over the past month. So in today's video, guys, we're going to cover a few things together. Number one, we're going to go through our major technical analysis rundown on our major stock market indexes, see how the recovery bounces are playing out. Number two, we're going to go through our big tech names and see the exact same thing. How are the recovery bounces playing out across of our big tech names? And then lastly, guys, take a very quick glimpse into my portfolio for some of the trades made today and how we are positioned leading into this week. And as a final bonus touch, I wanted to do something special for this video right now, which is going to be, we're going to spend 3, 4, 5 minutes discussing a potential trade opportunity on some dumpster diving deals, aka companies that are now at time machine prices, right? Just think so, don't think any further than companies like Intel. A lot of these will be retail facing. Intel is actually one of the only tech names that I have in this list, but I'll explain to you guys the strategy, right? We're looking for companies that are at time machine prices, potentially 5, 10-year ago prices right now. Companies that are legacy brand names, household brand names, but that for different factors, of course, have just been on continuous declines over the last 2 years. Intel is definitely one of them. PayPal could be a second one. You guys know of that massive decline right there. Another one can be Stanley and Black & Decker. All of these companies, guys, are down tremendously from their all-time highs, and you can find them pretty much almost at 10-year discounts. So a few other ones are going to be something like Papa John's Pizza. That as well, guys, is down 70%, back down to about 2018 or even 2014 prices. And the list goes on, right? Estee Lauder and stuff like that. So I want to build together a list of about 10 to 20 companies. And what I will do, if you guys want me to do it, is I'm going to start a totally different trading account and put $2,000 into it. With the first $1,000, I'll buy my initial entries into all of these companies. And then in the event we get into a more severe form recession or recession narrative, and we see the SPY come down 15-20%, the QQQ's down 20%, Microsoft, Alphabet, Amazon all down 25-30%. at the height of that fear sell-off is when I'll be adding the last $1,000 into all of those godforsaken companies right there. And then we will just ride it out and see whether or not it is possible to build a stock recovery portfolio, or whether or not we're just better sticking to the highest quality names in the index. I'm doing this experiment, guys, because a lot of you constantly ask me if it's a good proposition to be buying these companies that are maybe 60, 70, 80% off of their all-time highs in unfavorable environments right now. So we can do that experiment potentially together. Should be quite a fun one. So that a lot to cover in today's video. Let's jump right into it. So the SPY up 0.05% and the QQQ's only up about 0.22%. Once again, like I said, guys, fairly muted day because traders probably waiting for all the data points we have this week. Now, keep in mind, take a look at this heat map right here. You will see that it was really not a very good day other than really NVIDIA. No true bright points in the market, but also to the downside. We don't notice much in terms of multi-percentage declines to the downside. So fairly muted day as a whole, but it was a relatively larger day to the downside for the markets than it was up for sure. NVIDIA and Apple pretty much carrying so much weight, guys, making up for all of these companies that are just ever so slightly red. On the one-day relative performance, you can see that even better, only energy and technology etching out some gains. Everything else pretty much to the downside, at least on the 1 week relative, because of the size of the bounces that we've gotten. Well, now everything is still in positive territory. But if we roll it back a little bit further into the 1 month relative performance, guys, you will see that the picture is not so perfect, right? Only real estate, utilities, and consumer defensives are the ones in the green, and usually those with healthcare that is still slightly in the red. These are the ones that usually perform the best in an environment where we're heading into a bit of recessionary headlines and also decreases of interest rates. Those will be very beneficial, especially towards real estate and utilities. So those sectors remain my two outperform bids for the foreseeable future, talking about the next 1 to 3 months. I think they will do very, very good, especially considering the fact that we're probably going to get multiple rate cuts by the end of the year. So let's get into our technical analysis right away, shall we? So moving into the SPY right away, SPY still on our bounce, right? So this is the bounce that we've been looking for here, guys. What are the bulls trying to do after such a massive drawdown? We need to get a sizable enough bounce underway to give the bulls some space above these lows to be able and reset into a higher low and finally probably into a higher high and try to recapture that uptrend. But it all depends on the size of this bounce. Take a look at the size of this bounce, as a matter of fact, and you can see as of today, we got all the way up to about 55%. That is very decent. I would like to see them get all the way up to about 538, which is this yellow line right here. Prior support for the markets should be current resistance. And if I remove the fib right there, that is the 618 level. And you'll see that is where we have a lot of confluence for our moving averages as well. So if we can get one more day of bounce into here before getting rejected, it does provide the bulls with ample space to be able to potentially set up for a daily lower high, a higher low, and maybe reverse into a daily uptrend. Now, all of this is obviously data dependent. If the data comes in negative, guys, do not expect the bulls to be able to put out such a good fight, right? We may just come flushing right back to the lows. So even though we have created a decent amount of space, we still have that economic data uncertainty, and just a few big red days, guys, can completely undo any technical patterns that we're looking for. So the moral of the story is, until we have a daily confirmed uptrend, be very, very cautious in these markets. Moving on to the QQQs as well. QQQs, same concept as we were looking at on the SPY. So big daily downtrend underway for the QQQs, looking for the size of the bounce to create some space to maybe open up the chance for a daily uptrend reversion pattern. Now take a look at the size of the bounce. You will see that we're not quite at 618. This would be this line right here where my mouse is. And right now we're sitting at roughly the same place as the SPY, roughly 55% gain in relation to the drop. So decent size gain, but as I've explained with the SPY, guys, it is entirely going to be reliant on positive data coming, oops, that's the wrong one, positive data coming out this week for the consumer. If we do get some positive data, then we might be able to have a chance at resetting the daily uptrend. If the data comes in way more negative than expected, guys, expect volatility to resume. We're going to get some more big red candle days, and then it's going to be tough for the bulls to counteract that momentum. So please be very careful in this market right now. The one trade that I potentially do see coming up as a whole here, guys, is undoubtedly the breakout to the downside, retest of prior support, which is now resistance, this is your short entry opportunity. If you are looking to short these markets, there's probably not going to be a better opportunity than this here, guys, right? Talking about this one right here, 456 on the QQQs. So the art of the short pretty much is we're going to be waiting for potential loss of the 1 hour time frame. If we pull up into this area and then lose the 1 hour time frame, we get a local high to base our short stop loss off of. And then when we get a retest right here, that would be your entry. The stops go above here, and then we're looking to pretty much ride this one on a daily decline. That is the short setup that we are potentially looking for here, guys. So it's here, it's pretty much almost ready, and that is going to be the levels that I'm looking out for myself while playing futures potentially to the downside. Now, moving into XLF Financials, exact same setup. So they had a nice little daily up movement going right here, and then they got completely flushed. So loss of the daily uptrend is confirmed, right? We were looking for the size of the bounce because if the bulls can put in a decent enough bounce, we may have a shot for a daily uptrend reversion pattern. Now, take a look at the size of the bounce on financials. You will see that they're also up about 55%. Not quite at the 618, but a decent sized bounce to say the least. And we are above this previous big box here of weekly support, right? So nice to see that the bulls were able to, with the most recent bounce, to get back above our big area of support. It was your prior all-time high resistance, now acting as current support for the market. So at least the bulls have something to fall back into, right? If for whatever reason we weaken throughout the week and come into this support, we may be looking for the bulls to start taking over and try for that daily trend change attempt. Financials, I'll remind you, should do fairly well in the context of decreasing interest rates as a whole. More specifically, guys, my favorite plays in financials are undoubtedly going to be Visa. I bring this one up probably every single stream, but it's just because it's on a pretty much 4 or 5 month sell down period right now. And usually when we have such nice consolidation after a break of an all-time high, it represents a gorgeous higher low opportunity on a monthly time frame to take some further positioning, because we know that this one will most likely continue just grinding higher over time. That is just what Visa and MasterCard do across most, if not any single markets. MasterCard, the exact same trade. MasterCard is pulling a little bit ahead of Visa right now because it had better earnings, but you can see the technical setups are here, guys. We're trying for the weekly engulfing move, weekly higher low, and weekly reversion into a new weekly uptrend. Visa hasn't quite made it yet. It is lagging behind, but it provides a very decent trade opportunity nonetheless. Now, moving on to healthcare. Healthcare also coming down slightly today, 0.38% to the downside. And healthcare is kind of a tale of two scenarios, right? So we have a daily downtrend right here, and now we have a big daily engulfing move. So obviously the size of the bounce is over 100%, which gives the bulls the best chance at potentially being able to set a daily higher low and getting this back into a nice daily uptrend. So the bulls are looking very good, coupled with the fact that we are above our major area of support that we just cleared recently, that is 147 down to about 145, and they never really lost the weekly uptrend. Similar, or contrary rather, to our other indexes like SPY, loss of the weekly uptrend, QQQ, loss of the weekly uptrend as well. XLF Financials, not quite, but almost a full retracement back. Healthcare was actually the one that held up the best, and I do think that that should continue to outperform here, guys. Just have to look so far as this, right? Real estate, utilities, consumer defensives, which the ticker for that one is XLP, and then healthcare. Those are usually the sectors that perform the best at the onslaught of a recession narrative. Whether we go into a recession or not, those would outperform in either or scenario. Now, moving on to SMH semiconductors. So semiconductors trying their best. We're obviously buoyed by NVIDIA's gorgeous 4.5 move up to the upside today, but same concept remains, right? We were in a big daily downtrend on the SMH, huge move to the downside over the last 2 weeks, and now we are in recovery mode. So SMH, contrary to the rest, has indeed set a new daily uptrend. So if this move does get topped out right here, guys, we will just be looking for a daily higher low, anything above 210.76, looking for that daily higher low for a potential second stab at this big red box. The big red box is the large area of resistance above us. It was previous all-time high resistance and should be acting as resistance once more for the bulls to try and get through, right? So be very, very cautious if we do top out right here with bad data and roll over. Keep in mind that will mean if we lose this daily uptrend here, guys, right? If we lose it and lose the higher lows, that will be the extent of your weekly lower high, and then we just might be looking for weekly lower lows. Keep in mind, because we are in a daily uptrend right now, we are officially in a weekly bounce, and then we measure the size of the weekly bounce. barely 38.2%. It is not going to guarantee that the bulls can just reverse this from here, right? For that, we would need to at least see a bounce all the way up to about 240, or at best, all the way up to 251 to give the bulls the best chance at creating some space to reset the weekly uptrend. Regaining weekly uptrends, guys, takes a very long time, obviously, because each one of these weeks is one single candle. So if you're looking for a pattern like this, you can imagine how many weeks it actually takes for the bulls to do it, because I think in these market conditions, especially, guys, I really don't think we're looking for the V shape. So be quite cautious on SMH. If anything right now, guys, coming into previous resistance, especially with all of the data, this could also be a potential short point of entry where we're looking for setups shorting near the 230 mark and looking to clear back some of these lows down here, maybe all the way to about 220, 218. That would be a nice little short setup. That would only be triggered pretty much if we pull up into this area, lose the hourly uptrend, giving us a baseline where we can set our stop loss. And on the retest right here, this is the entry, this is the stop loss, and we're going for the hourly downtrend rollover and consequently the daily rollover as well. So that is the short opportunity idea that I would be looking out for on that one myself. Now, moving into IWM Russell. So IWM Russell also down about 0.9%. They really got hit the hardest across all indexes today, but that's normal, guys. Growth stocks in the potential upcoming context of a recession usually don't do too well. So this breakout was just a little too soon, in my humble opinion. I was actually surprised that it happened. I was not willing to chase the market, and good thing that I didn't, because now we would be pretty severely underwater. That being said here, guys, daily loss of the daily uptrend is clear as day. Huge daily downswing, but we have not set up for the daily downtrend just yet. That would require a lower low. As of now, we are still trying to put a bounce together, but the bounce is running to a little bit of resistance. And where is that resistance, guys? Well, these two yellow lines that we had drawn, this has been resistance for these markets since last December. So very normal that the bulls are not able to get through that right away. Now, in terms of the total size of the bounce, guys, you will see it is not the best, right? Under about 35% top to bottom, which is not the best size bounce. If anything, it gives the bears a great shot at potentially revisiting these lows towards the double bottom. And then if ever we breach those, guys, we are probably coming down all the way 192, 190. I can really not touch this, guys. I would be more willing to touch this one if we have a long drawn out bottoming process, setting good support levels like we had back here. That is the only time possibly in the near term future that I'll be touching the Russell. But with the recession headlines, guys, probably not the safest bet out there. Now moving into the Dow Jones. Dow Jones also making a little bit of a bounce attempt right here. And obviously we have lost any chance at a daily uptrend by flushing these lows. So now it is up to the bulls to prove to us, can they put in a decent size enough bounce to get the daily uptrend back? Well, let's have a look here, guys, right? So having a look, bounce size about 38.2%, not good enough. At least they've been protecting the hourly uptrend as best as they can here, guys, right? But it's not looking the best. If we do break these lows right here, 39,250, and that would signal a hourly downtrend rollover, then the size of your daily bounce is finished, and we look for the bears to potentially revisit these lows down here. A 38% bounce, guys, is just not good enough, and in this market where momentum is heavily biased to the downside, it probably will result in that revisit of these lows. At least we do have a good support level down here, 38,600 down to about 38,200. So we will tackle this one day at a time if ever we get there. Keep in mind, though, we have never lost the weekly uptrends. We are still in a weekly uptrend, trying to find our weekly bottoms right here. So we'll take this one day at a time. As of now, the Dow Jones holding up better than other indexes for sure, but still the bulls are definitely not out of the woods yet. For that, you would need to see a clear daily uptrend reversion and then possibly pushing towards the new all-time highs, breaching this resistance above us, 39,900. Now moving into the VIX. The VIX also, I closed my last position that I had on the VIX today just because we have so much news and so much uncertainty coming at us for the rest of the week. So I took all of my gains on the VIX. It was a very beautiful ride. This is where I opened my call options and my shares on SVXY, which is just an inverse play to the VIX. So you go long SVXY if you want to short this VIX essentially, right? And these were my levels. Happily, I rode the calls all the way down to pretty much the next morning right here. And then I wrote down my shares all the way down here, profiting very, very handsomely, guys, on those shares. quite happy with that one. If you want to see the SVXY trade, pretty much we clipped it all the way down here, guys, all the way down here, and we closed pretty much at the top today. But I'm just not taking any chance, not giving back any profits to the market if we have bad economic data releases. That will result in a spike in the VIX, maybe give me a better entry to continue shorting the VIX, right? But take your gains when you can, guys, in these markets. Do not leave anything on the table. Do not give anything back. You might miss out on a little bit of profit, but at least you are not going to round trip any gains, which is the last thing that you want, right? Now, moving on in to our big tech names, shall we? So moving into Apple, Apple was up today 0.6%. Fairly good day for Apple right now, but I think Apple is really reaching terminal velocity to its bounce right now. We are really coming in hard into this resistance area, 220 down to about 215, right? We're coming into it now, guys. Big prior area of resistance. And the bulls have to give them that, though. They have put in a very, very nice bounce all the way up to about 80%. So this does give the bulls a very, very good chance, guys, at setting up for a daily higher low attempt and getting back into a daily uptrend. Now, on the weekly is also protected right now for Apple. We have not lost the weekly uptrend, so they do still have a chance at saving this. And if ever markets don't favor an all-time high breakout for Apple, at least they might be able to hold somewhat of a tightening range at the higher levels. But keep in mind here, guys, if the rest of the markets continue rolling over, Apple is not going to be able to save the day on its own. Most likely, it will also be met with some heavy selling pressure and give back too much of this move, and you open the door once again for a new daily downtrend set up by the bears. So it's all up to the bulls right now for Team Apple to reset the timeframes in their control. But as I said previously on Apple as well, I am not playing this one, guys. Even though it's Apple, even though it's a very solid company, I want to see it more at about 200 to 195. If we don't get there, perfect. I have some long-term shares of Apple, but swing trading, meaning selling puts, call debit spreads, stuff like that, I am not going to touch this one until it gets closer to the 200 level. I just cannot allow myself, guys, at these valuations. A 3 peg for Apple, even if it is a solid company, guys, is very rich. So be careful with this one. Moving into AMD right now, AMD trying its best to get a little bit of a push here together, 1.86% to the upside, but you can see how tough it is for AMD to breach above this level right here, right? 137 seems to be the no-go zone for AMD. Took them 4 days to breach it to the downside thereafter earnings, and then it's been taking us 7 days of trading to at least try and poke our heads above it. So AMD is trying to coil for the daily uptrend setup, but we need a break and close above 139. Give me a break and close above 139. Daily uptrend is underway, and then we can finally start measuring in terms of weekly. How much of this weekly move can the bulls take back to maybe start setting up for a weekly trend reversal? But as I've said prior, guys, resetting of a weekly uptrend takes a very long time. Look how long it took them to do it right here. 6 weeks of trading pretty much to get a confirmed weekly uptrend, right? It does not happen overnight, but then when it does happen, sometimes it can be quite explosive, right? So we're going to try to look for opportunities on AMD. I still love this company. Anything pretty much below, if you can get 125 down to 115 in terms of short puts, I do believe that to be very nice. And even if you're trying for the breakout play right here, call options right now are going to be a little bit expensive because volatility is high right now. But one way to mitigate that is with call debit spreads. Usually I only go a couple strikes out of the money. For these ones, I'd probably choose something like the 140s versus the 145s perhaps, right? Which is not too far out of the current price range and could see some decent appreciation to the upside. And if ever we're wrong, well, at least it doesn't cost us that much because they are call debit spreads. Usually it doesn't cost very much to actually throw those on. So AMD looking pretty good right here, but the bulls are not out of the woods. We need to get that break and close above that 137, 139 level to really start getting some momentum on this trade and start attacking the higher 150 level, right? Now, moving on down to Amazon. Amazon as well, really mixed location on Amazon right now. It's kind of a tale of being in between two areas, right? We are not quite at the big area of resistance above us, which starts at 172, and we're also a far cry from the big support levels below us, which start 155, arguably all the way down to about 140, right? The bottom end of this whole range of trading right there. So that's why it's very tough for me to position myself on Amazon right now, because we don't really have a sense of who is in control. One thing's for sure, the short-term control definitely has to go to the bears, right? Huge move to the downside, just looking for a lower high, and then depending on the size of the bounce, either looking for continuation by the bears to the downside, or the bulls' potential attempt at a daily trend change. As of now, the size of the bounce is roughly not even 40%. So if you were to roll over from here, guys, and lose this hourly uptrend, which they're trying so hard to protect, right? If we lose it in a significant fashion, you should know that your daily bounce is finished, and then it'll be up to the bulls, even with this weak bounce, to try and set up for that daily trend change. If not, guys, if the overall markets are too red, Amazon has a very high likelihood of revisiting these lower levels, but it would provide a perfect buying opportunity to potentially pick up some Amazon shares, 155 down to about 145. So playing short puts on it from here, guys, you can't get enough premium. The best premium you can get is maybe at the 162s, 161s, but you guys can see what happened. One bad day of data, guys, and we can come down into that location quick and further lose some levels. So I want to wait for maybe a little bit of a decline right here. Thereafter, I can probably find some premium, 155 down to about 150. That would be a great trade location for me. But as of now, Amazon's still trying to recover. Step 1 is still underway. We need the step 2 recapture of the daily uptrend to give us more confidence in our lower areas of support, right? As of now, we have nothing to work with. We need a higher low to be able to base some trades off of. As of now, our most recent low is a bit too far away. So moving on down to Google, give me a very brief second. So Google down about 0.87%, same concept pretty much, right? So Google was in the context of this daily downtrend and remains in the context of this daily downtrend as well. Keep in mind, we are only looking for a lower high, and depending on the size of the bounce, we can determine whether or not the bulls are healthy or not. So now we do have a 50% retracement size bounce on Google, fairly good, but I would like to see a little bit more, guys. I'd like to see about a 168, 169 push. That would put us right at the 618 level on the fib, and would give the bulls the best chance of resetting into a potential daily uptrend. But similar to Amazon here, guys, right? We are just too far away from the lows right now, about 4 or 5% away from the lows. So what we need to see is a daily higher low attempt. And when we come down here, guys, it's much easier to be writing short puts below here, right? 155 down to about 150. That will be a much better location on Google because it is a much larger support area. Prior all-time highs right there, congestion in the market earlier in February, and this should be the location where the bulls do find a lot better temporary support for these markets. So as of now, daily bounce remains to be underway, but keep an eye on the hourly time frame, guys. As you can see, we're struggling a little bit with it right now. If we lose these moving averages in a big way tomorrow and set up a big hourly downtrend move, you know that your daily upside is finished, and then we look to the bulls. Can they set up the daily higher low for the trend change, or will we just simply be revisiting these lows, continuing this weekly move to the downside, and maybe retesting a larger form support area around the 152, around the 155, pretty much, or 152 all the way down to about 145 would be a gorgeous, gorgeous, gorgeous monthly breakout, retest of prior all-time highs, and then maybe run later on in the year. Gorgeous setup on Google, but need to be a little bit more patient for it. Now, moving into Meta. Meta down about 0.35% today, and this one actually had one of the best bounces in the entire Magnificent 7 list, right? So looking very, very strong on Meta, pulling up into all-time high resistance right now, which is pretty much 517 up to about 531. But similar to what I had to say about Apple, right? It cannot do it alone here, guys. If the rest of the market is not favorable, do not expect Meta to continue plowing through the all-time highs as if they're not even there. Most likely they will be subdued into a little bit longer form consolidation. That being said, the bounce is extremely good right now, so any pullback's just going to be looking for a higher low for a potential daily trend change attempt into those all-time highs. The location that I really like buying Meta stock at, guys, is down here, 482 to about 456. So in the event the overall markets continue rolling over and we get some further opportunities to pick up some Meta down here, this is where I'll go shopping, target number 1. And if ever we just blast through this over the next month, month and a half, you guys know that I'm sitting with some very, very large orders down here, 430 to about 420. Love the company, love the valuation, no red flags at all, just overall market weakness is the one thing that would bring this one down more than company-specific news itself. Moving on to Microsoft right now. Microsoft, love this company at these lower levels here, guys. 0.19% to the upside. So Microsoft still kind of struggling a little bit with its bounce attempt, right? So big daily downtrend underway by Microsoft right now. Still trying to find that daily lower high, and the size of the bounce right now is pretty average, right? So not the best, not the worst, really just average. As you can see right now, We are down, or we have retraced pretty much almost 55% of the move, so have created a decent amount of space off the lows to set up for a daily trend change attempt. Any revisit of this level right here, guys, I will be looking to swing trade Microsoft, whether that's for short puts, like I said in yesterday's video on the top 5 options, or even call debit spreads are very juicy down here. Think maybe 3 months out in terms of time, and maybe just targeting slightly above us strikes like 405 versus the 410s type of thing for call debit spreads, at which point we'd maybe be at the 395 level, so we wouldn't be too far out of the money on those. Could be a very decent trade. Now, Microsoft, I love this level for that reason, and obviously it's been a big level of support for the entire year so far, ever since the early portion of January. So looking for the bulls to kind of hold and consolidate at this location right here, would not mind adding extra shares. And if ever it breaches here, guys, well, we'll deal with that when it comes to us, but we know that the next big level of support is all the way down here, 375 to about 350. That is a huge buy add target for me, even for my long-term portfolio on Microsoft. Looking excessively good, coming out of daily oversold conditions, and just overall looking extremely strong amidst the sell-off in the markets. Now, moving into Netflix. Netflix down about 0.13%, and Netflix as well, right? Netflix has been one of the ones that has had a very juicy bounce, such as Apple, such as Meta as well. So holding up fairly nicely. It was a big daily downtrend right here, 100% engulfing move. Look, recaptured almost the entire move right there. So now it's up to the bulls to prove to us, can they set up for the daily trend change? They have the bounce size. Now will the markets cooperate and allow them to set up for the daily trend change, put an end to this weekly consolidation, and start maybe recapturing a little bit of this weekly downtrend activity into a potential further further later on in the year, a maybe weekly trend recapture as well. So Netflix not looking too well, at least. Yes, we are in the context of this box of resistance, 633 to 607. But at least we're at the higher end of that. So they have a lot of buffer room. I would not like to see them break down below the lower end of this, which would be 606. If they can hold 606 and blast higher, that would be a gorgeous weekly uptrend recapture. And then we would measure the size of the bounce on the weekly to determine whether or not Netflix can recapture the weekly uptrend in short fashion, or whether or not we may delve into a tightening range. If the weekly bounce is not good enough, we may just end up in a tightening range, such as the one we had back here. Now, moving into NVIDIA. NVIDIA up 4% today, but they were actually up a lot higher on the morning, breaching levels as high as about 111. But all in all, fairly decent day from NVIDIA. So I'll remind you what the context is, right? So context was the daily downtrend. Now we have a daily uptrend in motion, similar to the SMH index. So moving on in, guys, keep in mind we have a big area of resistance above us right now, 119 down to about 115. That is going to be big resistance for the bulls. So in the event we pull up and get rejected here, we will just be looking for a higher low. Anything at this point above 98.71, looking for that daily higher low for the trend continuation. However, if we were to roll over these gains from here, guys, and breach these lows, 98.71, you need to understand the daily uptrend is lost, and we are maybe in for another weekly leg of selling, potentially bringing us all the way as low is about that $90 to $90 range. This is where I prefer playing NVIDIA most, right? Is in the lower $90 range. Think $90 all the way down to about 80 bucks. I want to be getting as close as possible into this prior area of consolidation to be making any short put trades or put credit spread plays, and even call debit spreads. Call debit spreads, I'd be more interested if we hit the 95. I may throw one or two contracts at it. And if we dip even lower to the mid 180s prior to their earnings at the end of the month, I'll be probably throwing a little bit more call debit spreads at this one too. So going to be very patient on this one. I do not doubt that it's going to have very tremendous earnings, guys. And I don't even doubt that it might have a little bit of an earnings run up, but we need to get through this week first. So I will remain patient on playing NVIDIA. Now, moving on to Tesla. Tesla down about 1.25%, and Tesla just basically doing nothing for the last 6 days of trading, right? So moving on down, daily downtrend on Tesla is confirmed. They are trying for the daily trend change attempt, right? But as of now, it's not looking too good because of the size of the bounce and the location of this range of consolidation. They only bounced 38.2% of the move, not good enough. And because it is at such a low level right here, guys, traditionally, this can be viewed as a bear flag for further downside continuation, right? So we'll be on the watch for that, especially if consumer data this week is relatively poor. Well, then expect Tesla, a consumer-facing brand, to unfortunately come to the downside. We'll be looking for breaks of 182. If we do break 182, guys, just understand that your weekly downtrend weekly consolidation simply continues, and the lower level of support is 177 down about 161. Very, very, very contested area in the past. So hopefully the bulls can do a better job of holding that one up than they've been doing right here, right? So this is the area that I would be tempted to play Tesla. If we come down to this area, 180, then I'll be looking for short puts below 160, 155, 150. Gonna go very, very, very conservative on these ones, especially with recession headlines in the midst of trading. Moving into Palantir right now. So Palantir coming down about 2.1%. They actually hit a high today of 31.15. Massive, massive, massive move by Palantir, breaching our prior level of resistance from 2020, 2021, which was all the way up to about $30, right? That whole $29, $30 range. We are now above it. So what the bulls are trying to attempt right here is the infamous breakout and retest. The only problem though is that they didn't break out that much, right? Usually when you want to see a breakout retest trade, you want to see the bulls carry the momentum a little bit higher, create some space above this support. That way on the downswing, the bears run out of momentum, and by the time they're out of momentum, they encounter this fat area of support, and we can get a nice little bounce for some trend continuation. So the bulls giving a little bit back too soon, in my humble opinion. We'll keep a very close eye on this one. If ever we come down below this area that we just cracked above, we'll just keep in mind, guys, anything above 21.18, just looking for a daily higher low for potential trend continuation on the daily, right? If we do breach down below here, I do believe the next area that we could find some support at is these huge weekly bulls that should be sitting right here. Big weekly resistance for the markets should now be acting as current support. So that would just be looking for a weekly higher low for furtherance of the weekly uptrend. But Palantir looking very, very, very solid right now, guys. The bulls can defend this area. I'm just saying if the rest of the market does not cooperate, do not expect Palantir to be able to lift everything on its own either. So that's pretty much everything we had for today's rundown. Now let's take a look at my portfolio. All right, guys, so taking a look at the portfolio right now, before we get into the positions that we can see, let's get into a few positions that were closed today. Today, we realized about $260-ish of profit, so it was a very decent day. Largely, a lot of that was the SVXY trade that we sold. So we sold the remaining shares position. As you can see, we picked them up back in the day here for about 40.67 at the bottom of the drop, or the top of the VIX, essentially, and we sold them for about $9.37, or $9 higher, right? So very, very nice gain across the board on those. Very decent amount of profits, about $215, $220 of profit right there on a very small position, right? So about 22% in just a few short days. So I really like the way that that trade has played out. That plus all the call options that we had, we netted about $450 from everything. So very decent day as a whole. Now, in terms of some other trades that we closed today, guys, well, we only had a few positions on Barrick Gold leading into their earnings, and they beat and had a nice 6% to the upside day. So we were able to pocket all of this premium. You can see that we wrote those on the Friday session back here. On the Friday session, pretty much, let me just see if I can find them real quick. Are they all the way down here? Let's just take a look. All right, here they are. So the 16.5 puts, 3 put contracts for about 13 cents, well above our 0.5% rule. So you're able to close all of that here today. Those are pretty much the only positions that we carried over for earnings into this same week. Now, in terms of the positions, there were a lot of other swing trades last week that we did made. All you need to understand is that last week we had a very good week. We didn't get assigned any positions we didn't want to be assigned. We had pretty much profit on all the wheel trade strategies. And also we didn't have any substantial earnings losses either. There was only one earnings loss, and it was a very small one. It was on Elf Beauty. We lost about $75 on that one, but with other positions that we have on it now, we're hoping to make those back over the course of this week. So very good week of trading last week. This week, you will see, guys, I did not put in almost anything in terms of positions today. I am being very patient with this market, waiting for the market to come to me, and especially waiting for that economic data over the next few days. So you'll see AMD still have the entire position covered right here, right? The AMD that I got assigned at 140, they are entirely covered within the money calls, not taking any chances whatsoever, letting the volatility play out and waiting for those pullbacks in the market to potentially get out of these calls and just ride the shares higher. Same thing pretty much for Amazon. Amazon, we are completely covered right now at about with the 160 in the money calls. So far, I mean, the average cost on AMD right now, with all the premium we've collected on covered calls so far, is down to about 132. So we're not really missing out on that much gains right now. Even if the market is above the higher, we're still decent. We're still profitable on that trade. Amazon, with all the premium we've collected so far, our average cost is about 174. So yes, we are but still about $8 off of our buy-in right now, but it's fairly good. I know you see the $2,200 loss. That's just because it doesn't comprise all the covered calls we've been writing in the last 3 weeks aggressively, right? So still have my last batch of covered calls in the money covered calls, not taking any chances. If the market drops, we are fully covered. Now, we still have our 4 shares of ASML. Haven't sold any of those. Few short put plays. This one I put on last week, ATD. I really like it. I know it says that they close at about 26 cents, but in all reality, this contract right now is about 80% in profit. ATD had a very good day. We're all the way down here at roughly 76. I would have a very hard time believing we get assigned those over the course of the week, but if we do, I would love it. Great area to be assigned on this stock. So we'll just ride this one out. CP, new position for me, was talking about it last week on the top 5 options play. We didn't quite get 0.5%, but I'm happy getting at least 30 cents in credit for this one. If I do get assigned at 75 on CP, I will be quite happy, guys, because coming into my big area of support down here, 75, 72.50. If anything, I'll just add to that position. I do not want to get left behind, guys, when this one breaks out inevitably over the next few months of time. It should have a very nice rally ahead of us. So fairly happy with this one. Small position, just one contract so far. Nothing else has changed. I did add a little bit of Disney last week just because, guys, I'm trying my hand at some beaten down companies such as Disney, right? I was talking about their earnings last week, noting a notable change in their trajectory, bottoming out in terms of sentiment around the brand, and also in terms of management's turnaround story for their streaming, their parks, and their movie franchise business. So a little bit of a feeler position right here. Tiny, guys. I can go a lot bigger than this, but even someone like me running $100,000 in exposure in this account right here, only an $857 position because I know it could potentially drop more, but still going to make a little bit of an attempt at it down here. Elf Beauty, we have the 135 puts. We wrote these last Friday, as a matter of fact. We still got some great premium right after their earnings release in the morning. Great premium because we still had some volatility. And even with a 10% move down here today, guys, we're still a decent ways away from being assigned, right? All the way down at 135 would be an extra 6%. So we'll see how this one goes over the course of the week here, guys. But coming into bounce territory soon, probably. The hourly RSI is at 16 right now, and the 4-hour RSI is getting into oversold. So might be able to have a little bit of a bounce on Elf Beauty throughout the week. But Elf Beauty, this is definitely one of the areas that I want to be playing the stock in. It is the monthly big support level, right? Previous resistance, current support for the stock. So hopefully we had a little bit of a bounce here soon. Now, moving on to the next one that we added today, EVVTY. I've brought this one up a lot on the channels in the past. Evolution Gaming. Every time we get a massive downswing on this stock, I always try and take a position. You might remember when we tried to play it back in January. You may also remember as early as last June when we tried to play this one, and we got some very nice profit. We actually made about 10% in just a few short weeks, and that's exactly what we're trying to replicate right here, except for now it's in a much better location here, guys. Huge support for the stock on the monthly time frame right now. The fundamentals are absolutely amazing. They are growing fantastically, and this is one of the cheapest that I've ever seen this company with these fundamentals. Yes, they were this cheap last November and in August of 2022, but they did not have today's current fundamentals. So this is when I like to trade those stocks. Very small position, however, only 10.55 shares. I did $1,000 flat, so it could be easy to track the position, right? Looking for maybe a bounce of about 10-15%, and that'll be it for the swing trade. Moving on down, Google, same thing. Fully covered up on this one. We have the in the money covered calls, $160 calls right there. Our average cost on Google right now is about $164. So we're right pretty much at break even right now, but I'm not giving anything back to the markets here, guys. Going to keep this one covered for the foreseeable future. Moving on down, we do have one Home Depot put contract for their earnings. They have Home Depot earnings tomorrow before they're open. We will see how those go. The expected move is about 4.5% to the downside, about $15. So you can see here, guys, I chose to go 2 standard deviations away. We went with the 315s, $30 $3 away from the current price, and we got roughly $1 for them, right? So we're going to see how Home Depot goes, but I like Home Depot because not only are we 2 standard deviations away, but we're also respecting our criteria for being in a long-term support zone. Big previous resistance for this one, current support for the markets as well. So even if they get caught in some consumer discretionary spending slowdown narrative and whatnot, we should have a very nice fallback area of support to come into. So curious to see how this one goes tomorrow morning. Wish me luck, because you guys know my luck with consumer discretionary stocks, and yet I still continue to somehow play them, right? But Home Depot, in all fairness, is one of your more solid names out there, right? They do have a whole contracting business associated with them as well, and the home builders, which have been booming recently, really need them. Now, moving on down, you can see I also added a cheeky little Intel position right here. December 18, 2026 calls. So these are more than 2.5 years out, guys. $30 calls, and we got them for about $345 plus commission. We will see how those play out, guys. This is a pure lottery gamble. Throw about $1,000 at it. If it drops even more, if Intel comes down to ridiculous prices, $16, $15, $14, right? I might add a few more contracts, but we're just playing the recovery story here. Pure lottery play, guys. Now, we also added some swing shares of a very solid company, which I showed in last Friday's video. I have a whole list of high quality, high conviction companies right here. And this one was actually on a very good dip. McKesson. So if you guys don't know this company, just take a look at their long-term chart, and that should tell you all you pretty much need to know. Extremely high quality business. They had their earnings most recently. I was waiting for the earnings to turn around, and now we finally got the hourly engulfing move that I was looking for. So hourly downtrend after earnings, then right, came undone. The bulls finally get an engulfing move, looking to set the hourly higher low and potentially move into a hourly uptrend and start getting a little bit of daily momentum back for the stock, coming off daily oversold. All these things combined, guys, daily oversold conditions, high quality stock, 1 hour uptrend now in formation. That is when I take the gamble, because the risk now, we have defined risk. 535 is maximum stop loss, and we're targeting possibly 585 to the upside. So maybe $15 worth of risk and $30 worth to the upside. You can see I put these on, and we're roughly right around the same price as they are right now. Moving on down, still have the shares of Microsoft. Haven't added those. They're just a swing trade. I will continue to add to this position if Microsoft keeps dropping. A few more bull call debit spreads here, right? Some on Microsoft, some on Micron. I showed you guys those last week. Still have the Nike call, the OXY bull call debit spreads for December, which aren't doing too good right now, but a tremendous amount of time left on them right now. SMCI back in profit on this swing trade as well. We're probably going to target maybe $600 if we can get it. SoFi, we opened 3 contracts of SoFi pretty much at the money, $6.50 puts. This is just because not only do I like this stock at these price levels, we got a decent amount of premium, guys. We got 2%, right? So instantly our cost basis goes to around $6.35, and I love this stock at those prices. I may as well just hold the shares, because even just doing the wheel at these prices, right? Getting in at $6.50, then writing covered calls, every single week, you get a tremendous amount of premium. Very easy play in my opinion. And then I added a little bit of protection. These are protection hedges in the event the market goes down. You don't see any SQQQ in the portfolio just yet. I'm waiting for tomorrow's data to come out, guys, because tomorrow might be the time that I start adding some SQQQ or maybe even short futures, right? Because you guys saw the format that the SPY was looking at, right? I want to go short, but we're not sure if the markets are going to break. So yes, I will be having some maybe SQQQ for the downside on the QQQs and maybe some short futures on the SPY. But now coming into that, guys, I just wanted to have a little bit of exposure over the weekend, right? So this is a little bit of short hedging as well, but it's with long plays, more specifically long bond plays, because we know when people come out of equities because there's fear in the markets, usually the money rotates into bonds, especially in the context of a future rate decrease coming in the month of September. These should perform quite well. So I have TLT May 16 of next year, $100 calls, which is above the price right now. We got in last week for $384. They're performing nicely, up about $435 right now. We also have some TMF shares, which is the 3 times leverage version of your TLT. Those are up, not significantly, but we're up pretty much $1 on 25 shares. Very small positioning here, right? And even we have some $45 calls. These are in the money calls, guys, on TMF. As you can see right here, they're in the money. TMF right now is about 55.19. We're not so much more above in terms of extrinsic value on the options contract, which is why I like this one a lot. $45 calls, for this November, guys. This one I'm looking for more of a short-term swing trade, right? Looking for the inevitable rally. If in the event we get further market sell-off and further pressures on the Fed to decrease yields, you will see exactly what we saw last week, where we pretty much get a total crush in yields very, very, very quickly, which usually leads to those bond plays having some great upside very, very quickly. So that is the logic behind this one right here. This will probably be the first one that I close just because the time constraint is closer, and the TLT, I'll let it run a bit longer. Everything else, guys, is pretty much the same. So hopefully you guys enjoyed that. That was everything for the portfolio format of the video. Now, lastly, before we end, let's dive into what I want to do. Create a second portfolio for dumpster diving companies that are at time machine prices, right? I'm going to go through the list that I have tentatively set up right now, and you guys let me know if ever there's other companies maybe that I have missed on this list, or that you might want to see included in this list as well. What I'm thinking is probably 20 companies, 15, 20 companies, $50 each, and equal weight, of course, right? And we're just going to put into a portfolio, set it and forget it. Then in the event we go into a huge, recession narrative and the markets really start pulling back hard, SPY down 20%, QQQ 25%, Microsoft, Apple, Amazon, all of them down like 25, 30%, right? At the peak of that fear sell-off, guys, that is when I'll add an extra $1,000, $50 across any stock, regardless of where they are. And that will be the last that I touch of that portfolio. And then we'll just let it ride and see whether or not it's a good proposition to buy legacy, quote unquote, household name companies that are at tremendous discounts because their business model temporarily failed, right? Failed to plan for consumer discretionary slowdown and slow to adapt to it as well. So here are some of the names that make that list, right? We're gonna go through these quickly because we'll touch upon this at a later date, right? So Skyworks, completely not Skyworks, Stanley Black & Decker. I keep confusing this ticker. Stanley Black & Decker, right? Very simple, back to about 2015 prices, dumpster diving prices, time machine prices. I like this one. Intel, this one needs no introduction, right? You guys all know what happened on Intel, right? Down, time machine prices, 2011 in the dumpster, and we are diving for value right here. Another one, PayPal, right? PayPal, don't talk about it that much anymore, but I like this one. Decent value down here. Time machine prices, 2017, right? Another one, which isn't so much time machine prices, but is significantly off the all-time highs, coming into a big zone right here, is UPS, right? UPS down 50% from the all-time highs. Time machine is not in full effect, only 2019, 2018 at the most, but still, arguably time machine prices as well. Some other ones in the entertainment business, right? Caesars down considerably, 2022 prices, or prior to that, the pandemic, prior to that, 2018, decent big level of support. Another one in the entertainment business as well, Wynn Resorts and Casinos, one of my favorite brands to stay at when I either go to Vegas or stuff like that, right? You would have to go back, 74, you see it only a few times, right? 2022, peak of the asset market sell-off, 2020 recession, 2015, and then all the way back to 2009. Decent level for them, right? Another one, Alibaba, right? We don't really talk about this one much anymore, but still, time machine prices, almost back to IPO, right? 2016, 2015, that fills the criteria. Papa John's Pizza, nothing wrong with this company. A lot of these guys, the fundamentals are improving in the next couple of years. It's just the market doesn't care right now, right? Back to 2019 or even 2014 prices, off the all-time highs, 70%. Very unfortunate for a lot of these. Another one of these that I'm kind of warming up to as well, Helen of Troy. If you don't know what they do, a lot of kitchen and bathroom accessories and whatnot. They also own a few brands a lot of you are familiar with as well. And their market cap is down to about 1.13 billion. They're literally trading under book value right now, down significantly from the all-time highs. 80%. You'd have to go back to 2014 to find these prices on a company that's been in the markets publicly since the 1970s. Very, very unfortunate for them, right? It's just been a disaster these last 2 years of trading for a lot of these companies that didn't just see the inflation and supply chain and consumer discretionary income going down narrative playing out. Five Below. This company just a few short months ago was at $200. Now they are absolutely crushed down here, 70%, height of the pandemic or 2018 prices. Not much wrong with the company. Yes, management poorly managed the economic landscape right now, but definitely a brand that is able to recover, right? Another one like that, has to be SVV, Savers Value Village, right? Your thrift stores. This one, although we don't have most recent pricing history, has been absolutely destroyed since coming in public, pretty much 2023, is down pretty much 70%. Market cap of 1.42 billion, and they bring in 1.5 billion of revenue per year, trading under one price to sales. Yes, their margins have been getting crushed because of consumer discretionary spending, but still, right? Just a candidate for that list. Another one, going to go through the dollar stores right now, right? Dollar Tree. Same thing, Dollar Tree, right? It has its problems. We've covered them on earnings a bunch of times. You'd have to go back to either 2021, 2020, or even further, 2018, 2016. So these are, for all intents and purposes, are time machine prices. Another dollar store time machine prices right now, Dollar General. You'd have to go back to either last year at the peak sell-off or 2018 to get these prices. Decent value down here, right? Can the recovery stories be longer than expected? Of course, we've seen that with PayPal. They've been at the lows for like a year and a half now, but eventually they do have the best chance of recovering. Estee Lauder, this one is at time machine dumpster diving prices, right? 2015, 2017. I mean, the company definitely has its problems. When you get into monthly oversold levels, you definitely have my attention. So that one is another candidate on the list, as well as it's not a direct competitor, but definitely one in the same industry, Ulta Beauty. Ulta Beauty's down, 43% from the all-time highs. You'd have to go back to 2021 or the peaks of 2019 and almost getting into the peaks of 2017. Coming into deep value, 306 down to 266 could be a nice location too. But down here, I see no reason to make a small attempt at the company as well. And obviously the companies we've been talking about a lot over the past couple of months, right? Disney, same story, right? Either last year at the height of the sell-off when people just wanted to ditch this stock into the trash, 2020 peak sell-off, and then all the way back 2015, 2014 prices, right? Nike also fulfills that criteria. Nike down to pretty much, 2018, 2017 prices right there. And then the last one, of course, Starbucks. Starbucks, I mean, it is not down as much as some other names, but still, some decent time machine prices, 2022, 2020, and we'd have to go a little bit lower down here in the 60s to really start clipping into the 2016, 17 era. But still, a decent little sell-off on all of these names, guys, pretty much. You guys probably know all of these brands, right? It's not as if I'm throwing you guys new biotech company names or, new technology company names with extremely high valuations. So all these companies have been crushed. So it could be an interesting experiment to throw some money into these companies at arguably the lowest point they've been in the last 2-3 years of trading, and some of them the last 10 years of trading, right? And just see whether or not that basket of stocks can outperform some of the highest quality companies in the name for the next 2-3 years, as maybe they start to embark on a little bit of a recovery narrative. So just some little food for thought, guys. If you have any tickers that you'd like to recommend to me, just please recommend me names that have been in the game for a while, guys. Household brand names that traditionally everybody should know about, right? Those are the kind of companies that I'm looking for. Most of them also pay dividends as well. Another one that I forgot on the list, Walgreens Boots. I mean, they have real bankruptcy risk, but still, I mean, $10 for Walgreens. Might as well, if I'm only putting $50 into it, right? May as well take the risk. So, even this one is a candidate up for that. So that's pretty much everything I had for today's video, guys. If you liked today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you here. We do these every Monday to Friday after the close. And lastly, if you have any questions at all, guys, in terms of stock selection, options plays, technical analysis, macro discussion about the recession, anything you guys want, leave it down below in the comments and I'll get back to you within the next one day. So take care. Happy trading for tomorrow. I will see you guys after the close. Peace.